What is going on, traders? Welcome back to the Traveling Trader. Happy Thursday to you. So today, obviously, I'm going to do the typical thing, go over the cryptocurrency market as well as some of the traditional market updates. We'll be taking a look at Cisco stock, at Walmart, at Nvidia stocks, and discuss some of our plays in the crypto and traditional markets, some of our strategies and plays and trade signals. So let's get right into it. Looking at the cryptocurrency market cap, hovering around 238.5 bill. No new volume injection here. We are seeing a little bit of action on some of the alts. Neo is up almost 15% in the last week. Same thing for Chainlink. VeChain up almost 30% in the last week. So there's been some movement, even though the overall crypto market cap hasn't really budged. We are seeing some movement here. So let us talk about Bitcoin real quick and see what is the prognosis in the short term. So looking at Bitcoin, we are still in this descending channel. For me, all indications point to bearish short-term action. And the reason I say that is a number of factors. I mean, it's pretty clear to me that in the short term, Bitcoin is bearish. So we have obviously the descending channel. Now, the breakout from the descending channel is usually a positive one. However, within the channel itself, it's descending. So that means the price is going down. We have the declining RSI, the VFI, which is a cumulative measure of volume to some degree. It tries to measure whether the volume, the inflows, whether the flow of volume is negative or positive, right? And in this case, we're below zero once again. And you see here what happened the last time we were below zero back in November 2018. This is when we tanked from 6,500 to about 3,200. I'm not saying we're going to 3,200. I'm just pointing out that the VFI is negative once again. The LMACD is also crossed over in the bearish direction, right? A couple of other things. We have the death cross between the 50 and the 200, as you see here. And we are now entering into the support range, at least the interim support range for the latter half of 2019. Now, this rectangle here is where I'm planning on buying back or accumulating Bitcoin, right? So this is between, it's not really that wide of a range, but it may seem wide to some. It's between 7,400 and 8,400. If you've been around trading long enough, you know that catching a falling knife is an exercise in futility. That's something that you're going to lose at more times than not. And, you know, especially if you're buying for the long term, you know, the difference between buying at 7,200 or 7,400 or, you know, between 8,000 and 8,400, in the long term, that is really a moot point. And what you should do is look to average out your buy-in to get the best buy-in, right? I did a video a long time ago that even if you bought at the high at 20,000 and you dollar cost average up until the current price point, your entry would be very close to what the current price is. And that's considering you buying at 20,000. So anyway, I digress. So that is the short-term prognosis as I see it for Bitcoin. Another thing that I'm looking at is shorts, right? So if you look at BTC USD shorts, the reason that we look at this is because you're trying to develop oh, wow, this looks really messy. Let me see if I can clean this up a bit and change the color on this. But essentially what you're looking at is market sentiment, right? So if I turn this to white, and I remove actually the 21 EMA is not on there. Okay, so here, this white line here, this is BTC USD shorts. And the reason that I'm pulling this up for market sentiment reasons, obviously, and also because when shorts are high, right, when shorts are rising, then there is a good chance of a short squeeze effect. So even if you are bearish in the short term, if shorts are high, like we see here, that is when, you know, any sort of momentous positive price action can snowball into a rally, right? And that's when you start to see shorts decline, is when those shorts start to get gobbled up because of the short squeeze effect. But when shorts are low, you don't really have that short squeeze effect as they are now, right? So shorts are almost at the low that we saw back in July. So we don't even have the prospect of a potential short squeeze, which is why I tend to look at shorts at least in the short term, to see whether the price action could be propelled by an activity like a short squeeze or not. And currently, it doesn't look to be a factor. So with all of that, my short-term outlook on Bitcoin is bearish, and you know, somewhere in this range I'd be comfortable buying. I obviously wouldn't want to see Bitcoin break below 7,000 into the 6,000s. I think we start getting into real midterm trouble there, where Bitcoin's price could take a beating for a long time, and the sentiment for Bitcoin could substantially decrease. But as long as we stay within this range, I think that, you know, for one, it will provide us with another chance at buying Bitcoin at a healthy support levels, and then also support a potential breakout, hopefully, of this descending channel in the midterm, and establish a new bullish rally. All right, we'll take a look at one other coin, Chainlink, which is absolutely killing it. If you're part of our traders community, you know that we've sent alerts out for Chainlink a few times this year. The most recent one being as it broke this 0.382 fib level, and we are now at above $3. It's holding the support level, which was former resistance, really well. If you want access to the trade alerts, link is in the description. I would like to see a little more volume here on Chainlink, but as long as it holds this support level and this magenta line here, which coincides roughly with the 0.5 fib level, then I think we'll be fine for a further rally. It would be great to see us get to at least the 0.618, which is at around $3.40. All right, let's take a look at the traditional markets. The traditional markets today remain pretty flat, really. Not much change in either of the indices. I think the markets are bracing for the China-US trade talks and you know, whatever outcome that produces. But there were a couple of big stocks that slid today. Let's take a look at Cisco. If you look at Cisco, it tanked. I mean, you see this downside gap here. It just keeps gapping down as it did, you know, back it did it twice in August, and then a major one today. This decline consisted of almost 8% really between yesterday and today. So should you buy Cisco here? Well, the reason that Cisco slid was because of disappointing future outlooks as it relates to tech spending. So you'll see here that it fell short of earnings as well, which is part of the reason for the drop. Now, Cisco is one that I wouldn't rush back to buy, right? And there's a reason for that. If you look at the monthly chart for Cisco, and this is actually very atypical of tech stocks, especially ones that have been around since the early 90s. If you look at Microsoft, if you look at Apple, if you look at Google, you'll see that the stocks themselves look like a linear progression, right? It looks like just a one linear line up. Here's Microsoft, for instance, just thrashing it, right? $148. If you look at Google, here's Google's chart. If you look at Apple, for instance, you know, here's Apple's chart as well, going all the way back to the early 90s. But if you look at Cisco, this is what concerns me about Cisco. I mean, it's not a huge concern, but one that doesn't put it in the same category as the other tech stocks is if you look at Cisco, it actually peaked in 2000, right? This is when it hit above $77, around $77.50, and never came close, right? So Cisco doesn't have a linear progression the way that the other traditional long-standing tech stocks do. And then if you look at the daily, the other reason why I'm not jumping back in is because there really isn't a support level holding it here, right? Yeah, we tanked 8%, and your gambler's fallacy inclination is, hey, you know, this major stock tanked, it must go up. And it might go up at some point, but you might be able to get a better price. And so where I'm looking at for Cisco to buy back is around this support range here, really between $40 and $42. So I do think we do have further downside action to go. This is also supported by the RSI that's declining. We have a ways away to go before it's oversold. The VFI looks like it's curling inwards. So does the MACD or the LMACD. So I do think we have the potential for a little bit more downside action on Cisco. I'm not rushing to buy back on this. Another stock that we'll look at is Walmart. Now, Walmart absolutely killed its earnings. And if you look at its growth in its different sectors, I mean, just their sales overall rose by 3.2%. Their e-commerce sales surged. I think it jumped 41% from last year. The profits were up, etc. So Walmart is just killing it in every category. And this right here is just a probably just a product, this small pullback that we see here, because it's down about 0.2% today, is just a product of, exhaustion after pumping the stock up for so long. It's been, one of the best performers of 2019. But I think Walmart is a great value stock. And you see that right now, support is former resistance, right? We spent quite a bit of time up here, about, a month or two, and now we're finding support at this level. So I'd feel comfortable buying Walmart at this level for the long term. The last one we'll look at, well, not the last one, but the other one we'll look at is Nvidia. Nvidia formed this long ascending triangle going all the way back to last year, finally broke out, and is now finding some resistance at the 1.272 fib extension level. Based on this article on MarketWatch, it looks like Nvidia's earnings are actually positive. We might see this flat price action here, this range bound price action. We might see Nvidia finally break out of this by tomorrow and head towards the 1.618 fib level at around $232. So I'm keeping my eye out on Nvidia. Again, I send all these levels out in the trade alerts, so sign up if you want access to those trade alerts. I do stock and crypto trade alerts as well. Obviously, Disney, we've been buying since before this gap. I've been accumulating Disney like crazy, made a killing on it. It is now up to $147, and I will plan on holding Disney, barring an overall market crash. Obviously, I plan on holding Disney for the very long term. I do think there is, somewhere around a $180 to $200 price target on Disney by next year. It added over 10 million subscribers in the first day to its Disney Plus platform. And then the WWE is the last one that I'll give you guys. The rest you'll have to look at the trade alerts. But the WWE is looking juicy here after gapping down, and it lost, I think, 50% since April. So it looks like the WWE is at a discount here, being oversold on the RSI as well. This is probably one of the opportune times to get in on this stock. Anyway, that is it for this video. Go ahead and leave a thumbs up if you got anything out of this, if you like the technical analysis. If you need help with your technical analysis, I do one-on-one consultation / training for technical analysis. That same link as the trade alerts is also in the description. Sign up if you want access to the trade alerts. I also do a 0.03 Bitcoin drawing for those that sign up. I do that every month just to say thank you. Leave a comment if you have a question or a comment. Subscribe. Hit that notification bell. Stay safe out there. Peace.